Okay, we back. Tom Lee on CNBC says we're bottoming for a month. God, you realize that he basically called out this dip. Puke was on the JP Morgan headline about no recession. They call him bluff. Heh. Is the old recession definition or the new recession definition, or is it a San Fran recession? The definition of a recession's never changed. Like, I know there's a lot of people who are like, 2 consecutive quarters is the definition because they listen to the wrong sources. Recessions in the US have always been called out by NBER, National Bureau of Economic Research. And that's been the case for like 40 fucking years. Nothing's changed. You're surprised Rockwell also got hit hard. That's a weird one to me. See how this one behaves in the future. Industrial automation is a sector I'd be bullish on for the long term. Slowdown in intelligent devices biz from plus 26% year over year growth to just plus 8.2% year over year in Q2. Yeah. Question is whether that's a cyclical feature or if that's like the new norm. Amazon kept strong though all day long. You love to see it. By the way, their capex for like the next 12 months, they've said it's like 50 billion, which is down sharply from like 60 to 65 billion. But they identified that specifically AWS spend was actually going to be higher, but it was fulfillment network that spend going down. So if that holds true, by the way, then that's a good tailwind theoretically for Amazon. AWS also still slowing. I mean, what, 12% year over year growth for the largest cloud provider and the still profitable one? Yeah. Steely, I agree. Should have known that Apple not budging me would eventually die off, possibly. Yeah, Qualcomm had a good day. If we can get down to 365 on the Qs, would I be a buyer? 365 put us. So right there, smack at the 50-day. I don't know. I think that's your first guess at a true bounce, but I like the fact that like when a company like grow forecasts like 12% or 13% growth, people are like, oh, I'm disappointed. Amazon trades now what, 14 to 16 times EBITDA for next year? It's not that disgusting. Remember, you don't use PE for them. You're loading up on TLT and the IRA. That seems like a good play. Like, it really does. I mean, particularly because, like, bonds yields dropped. Why not? What do you mean by why not, Regenerator? Doozy, you bought the Apple dip? Good luck, my friend. I don't know if it was today or Monday specifically, but Apple's, keep in mind, blackout period ends coming up. So a lot of companies can start buying back stock. Oh, Regenerator, why don't you use PE on Amazon? Oftentimes, because of how much they invest back in their business, their earnings numbers are usually off. Put it this way. Why would people ever buy Boeing? Right? Boeing's forward PE is 50. In previous times, their PE's been like 200. Boeing, though, you buy for free cash flow. Now, in the last 2 years, Amazon generated like no free cash flow because they upped investments way more than maybe they should have, particularly in retail fulfillment. Yep, so the retail sector is always a risk and fulfillment costs are surging, correct. But now they get to cut back on some of their costs, at least on the CapEx side, Tim. That's what they called out specifically last night. Like they were lowering their CapEx expectations because they took advantage during the pandemic and they built out like so much of their quote last mile fulfillment network. Which again, from like a corporate standpoint, like let's not be investors for a second. Let's be businessmen. It kind of made sense. It was smart. It was smart. If you're an investor, you fucking hate it. Because that was money they could have handed to us, right? Imagine Amazon doing a share buyback. But yeah, they took advantage of low interest rates. They built out their fulfillment network. Wimmer, we were all following steel, and there were so many reports of like Nucor's entire supply of steel joists being bought up by Amazon to build out fulfillment centers and data centers. Did I see this? Hold on, what's this one? Yeah, I've talked about this numerous times. Yeah, GPU supply issues involve packaging. It's called chip on wafer on substrate. It's super cool. This is super cool shit, by the way. Because they're basically playing Jenga with individual pieces of silicon. And in order to put them on top of each other, oftentimes they have what's called TSVs, or through silicon vias. It's basically like molecular copper going through the device so they can talk up and back and forth. Said no one, did I pick up anything today? I picked up a very, very, very small pair of positions in just Apple and Palo Alto for next Friday to play a bounce. That's all, but they were very small. I'm not buying anything seriously today. I'm just kind of watching. Just kind of watching. Padres fan, sounds like it's way above your pay grade. It's not. The important thing to understand is that basically, like for like TSMC's guidance, people are like, well, you know, NVIDIA can't make the guidance because of, you know, otherwise TSMC would have guided up. TSMC is increasing their investment significantly in packaging. Like they literally announced like a $2.8 billion investment in boosting packaging capacity. And by the way, it's not just NVIDIA who uses this. The Google TPU4 and the AMD's upcoming MI300, all of them use this. I bought calls. Like $500 of each. So it's this very small gamble. I do want to spend this weekend learning more about Palo Alto and more about Fortinet, because this drop seems like a lot. This drop seems like a lot. A week ago, this company was over $250. All right? Like, this is wild. Why did this company drop so much? Steel Coke Eggs, thank you for this. What we got? Yeah. Next week, spicy for earnings. May not be as large as this week, but come on. You got Alibaba, Disney, UPS, Palantir. Some people care, right? But if you go under the surface, you got Celsius. Celsius is a really interesting company. I always thought it was a meme stock. I've seen some of the data in regards to like shelf share from the CPG side, and apparently Celsius is for real. Padres fan, the Palo position just for a rebound expires next week, and I'll look to close it out on Monday, money making or not. But I'm tempted to look into a longer dated position. They have earnings, remember, literally 2 weeks from today. But like, I don't understand the drop. Celsius stock going to be the next monster. I don't know if that's true or not, because Monster's been one of the great compounders recently. But let's say this. Celsius, the company, is doing really well. Really, really well. You kind of cheer for that. God, next week you have Twilio. Datadog could be interesting. Eli Lilly, Novo Nordisk. Oh, you have you got some of the smaller semiconductor companies, by the way. I got Indie Semiconductor. All right, Indie. You got Supermicro, which is computer hardware, but only to data center. By the way, I'm avoiding the fuck out of that one. Avoiding means don't play it. Don't buy puts. Don't. I know you look at the chart, you're like, I'm tempted to. Surely everything's priced into that stock. It's not even outrageously expensive. That's the fucked up thing. But I'm not touching them. By the way, at some point when we enter an inventory digestion cycle for AI, holy shit, Supermicro is going to be a great short. Zirconium, I like this argument. You wouldn't consider yourself bullish on Disney, but at some point we're looking at an established company that knows how to make money and knows how to acquire assets. So any long-term investor should consider this an excellent buy the fucking dip opportunity. Yeah, I don't fully disagree with you. The only issue I have on that is we don't know what this collection of assets look like. Disney overpaid badly for the Fox studio. You do love buying used Supermicro hardware? Wow. What's this? Looks like it got removed. I don't know if it's just this page not found. Disney hasn't even tried to monetize them. Yeah. I'm judging. Yeah, that link should be to a spot. Yeah, it wasn't popping up. It was saying like video's been removed. Windy. Disney hasn't even tried to monetize their Fox asset. Yes. It's funny because I kind of shit on Disney a few times. I will not touch that company from a short or puts perspective because at any given point, like my belief is that company, good chunks of their assets are for sale, and you don't want to be short Disney the day they land a deal to sell ESPN. Put it that way. Spencer, you leave to take a business call and the market falls apart. Your fault. You touch yourself. We know. I'm pretty sure there are companies that are not on here, by the way, that are reporting. For example, Digital Turbine, I think, is reporting next week. And this is one I want to keep an eye on. Yeah, August 8th. Amazon, Google, or Apple would love to buy ESPN. I agree. Not only that, I don't think they're the only ones. It's going to be wild, Windy, if you actually see like a bidding battle between those monsters and like an MGM type entity or a Caesars entity or a Penn. Basically, do you go for the big streaming companies or do you go for the sports book companies? Bell, you called apps a shitco? Is it a shitco though? This is one I want to understand more. You don't think a full sale? Okay. Tim says, who even watches ESPN these days? Well, yeah, because I think Disney doesn't do necessarily the best job of monetizing it. But put it this way, every sports gambler will be using it if it's integrated with their gambling apps. And it might make a difference between whether you use like BetMGM or DraftKings, etc. So it's an interesting asset. That's what I'd say. And I think a company that could pair it with a gambling sportsbook asset, it's a lot more valuable than it is for the House of the Mouse if they're not going to do gambling. So yeah. Semis are fab. You heard someone else mention that it makes sense that Apple would move into the healthcare space. They already are. They already are, and it's actually really interesting. Apple moves relatively slowly. It's part of the reason why, like, I'm kind of negative towards like a lot of the people who shit on Apple. Like, if you don't think Apple's ever gonna grow again, like, they've been doubted for a while. And maybe I'm that way because I remember when Apple almost failed. Okay, mid to late 90s. I remember when Apple first released the iPod, specifically iTunes was their most important product at the time. I remember the iPhone. I remember everyone saying no one's going to spend $1,000 for a phone, right? All of this happened. iPad, why would anyone use a tablet when everyone has a computer? Like, we keep seeing this shit evolve in real time. And maybe because I'm older, which you guys love to remind me on, right? Maybe that gets kind of weird. Yeah, but that was the Jobs era. Yeah, it was a Jobs era, yeah. But, like, it wasn't like Steve Jobs was in the garage, like, doing all the coding here, right? Uneven Donkey, Apple actually did say AI. It was like the first time. I know, I look young, but I'm not. Purdue, iTunes is still shit. Purdue in my office right now. Right now, motherfucker. Let's chat. Let's chat. Purdue. Be honest, my friend. Do you remember life before iTunes? All right? Do you ever remember life before iTunes existed? Right? My dear brother in Christ, let me explain what happened. Some of you are going to laugh. If you wanted to buy a CD, you went to a store and you bought the whole fucking CD. You bought the whole CD. Shut up, Wendy, on Napster, yeah. You literally bought the whole... And remember, there's 2 good songs. Every other one sucked, right? Really, what iTunes did, all right? Yeah, you started in 95. So you remember this, right? Don't look at the iPod or iTunes as their individual product. Look at what they did for the music buying ecosystem. Then, I see you guys keep mentioning pirating shit. Trust me, I know. But yeah, you learn to like the ones that sucked, yes. But literally, like, before iTunes, it was Apple's negotiations with the major studios, the major record labels, that got the idea that you could purchase music a la carte. You want to buy a song, 99 cents or $1.29 or $1.49. All right? Before then, you had to buy a whole fucking CD for 1 or 2 songs. Do I miss the vinyl days? I have vinyl behind me. Asshole. I miss the mixtape days. How about that? But yeah. Jay is discussing it from business perspective. Yeah. Basically, like, if you want to look at the history of Apple, Apple's all about cucking partners, business partners. So you start with them destroying, essentially, and rewriting the rules for first the music industry, then the book industry. And actually, that was more of Amazon, right? And then you can look at what they did to AT&T. Remember? AT&T was the exclusive provider for the iPhone. Who the fuck do you think made the money in that relationship? I'll give you a hint. It was not AT&T. Yeah. iTunes was used to rip CDs. Yes. You understand it. But the whole point about it was fuck the software. In order for iTunes to work, you needed a marketplace where you could buy music song at a time. That's what Apple gave us. And they don't get the respect. I'm telling you. Jay, connect. It sucked, Purdue. But at least you get to go through that pain to buy one song and not the whole fucking CD. Do you know what sucked worse than connecting an iPhone, iPad to a PC? Driving to a Tower Records or to a Moody's Music. These were actual stores that the people, they smelled so bad. I'm telling you. It was terrible. Anyway, yes. I still kind of wonder what was Apple's most consequential product. And to me, it's either iTunes or the iPhone. I think I now lean towards the iPhone because literally digital computer you carry. But at the time, for a long time, I thought it was iTunes because of what it did to the recording industry. Party on Bar. I love this statement. Groups like Black Eyed Peas couldn't make it pre iTunes. Band had to make albums and not singles. Counterpoint is iTunes. After iTunes, you couldn't have bands like Sugar Ray. Anyone know what I'm talking about? Hmm? And remember that song like I just wanna fly, right? What if I told you Sugar Ray was like a punk like band? So if you bought that album, you had that one song, Fly, which everyone knew from the radio, which was a super cool, chill, almost sublime sounding song. And then the rest of the album was just completely unlistenable garbage. If you don't like punk, it's bullshit. Used to be metal. Yeah, metal, punk, whatever. Your kids never use iTunes. You have Pandora and the other one. Spotify, I assume. Shut up, Steely. One hit wonders, yep. Same with that Green Day song. I remember Green Day was one of the shortest concerts I've ever been to. I saw Green Day back in their Dookie tour. They were on stage for like less than 45 minutes. Because all their songs were like 3 minutes, and they just sped through them fast, and they were done. The concert, and like everyone's like, "What the fuck?" Hey, Mole Horse, why is Apple down 5%? Yeah, because their earnings did not inspire joy. They did fine, by the way. Apple did fine, but they didn't excite. If you want to compare Apple, compare them to every other consumer electronics or hardware provider, and they are dealing with this downturn in consumer electronics and the smartphone market better than everybody else. The problem is their market is shit. That's just everyone bought cell phones during COVID. That's it. Padres fan, did they even announce a buyback? No, they don't. They already have an existing buyback. Like they announced like an 80 or $90 billion one last quarter. They're fine. Wendy says fine is not good enough at this valuation. That's fair. Yep. The funny thing is, by the way, guidance wise, remember, Apple doesn't do formalized guidance, but they do qualitative guidance. Basically, their CFO talks in very broad terms what he expects next quarter. He basically says about the same thing that they accomplished year over year this quarter, that's what they expect in the future. So that's actually why Apple's down. So, okay, they're talking about somewhere between a 0 to 5% decline year over year for next quarter. Now, what's interesting is that the sentences that followed that were, this is assuming the economic recovery, the broader macro economy, looks about the same that what we observe now. That's what we're modeling in. Meaning if you do see any economic turn to the upside, Apple expects upside. If we stay where we are now with, quote, uncertainty, that's where they are. 4 quarters of a year decline in a growing economy. Dude, the mobile phone market is cyclical. Like everyone knows this. Like everyone knows this. If Samsung's phone division and Qualcomm and MediaTek, if all these companies were posting beats and Apple pulled the result they pulled, send Apple straight to hell. Like literally very, very bottom. They are literally outperforming everyone else in their sector. The China strength was actually really interesting. I was surprised. I was not expecting. We had heard stories, by the way. We had heard stories that Apple was doing really well in China, but we still thought it was compared to like depressed expectations. No, they beat expectations in China pretty well. You're going to a Post Malone concert next week. Ooh, have fun. Not my style, but The high-end stereo market being dead, that's an interesting. I, how much of it is just digestion from COVID? Because Sonos had called this out previously. Sonos had called this out previously. This is an interesting chart. Yeah. Can you tell when, for that bottom left chart on EPS, can you tell when everybody went through the process of upgrading their home stereo systems? Whatever happened to Jay-Z? Oh, I have no clue. That's a good question. What was my go-to vinyl? Well, I was a DJ, so I played electronic music, so I like house and techno. So I always like whenever I play vinyl, like I'd play actual like tracks. Qualcomm is still holding. That's good. You meant Tidal. Tidal. Hold on, Windy. No one tell Windy this. Windy, if I told you it got acquired, right? If I told you it got acquired, all right, and I told you that it was either by Intel, Coinbase, or Square, which one do you think it is? Hmm? You'll laugh at the answer. It got acquired. We don't ever talk about it because there's no reason to. Square is correct. It was acquired by Square. Fuck, right? Yeah, you're like, whatever happened to it? All of us are like, yeah, whatever happened to it? Just Jack Dorsey bought it. Fuck it. Yeah, Spencer. Title got acquired by Square. I'm with MB Tosca. That's why you never want to invest in Square. This is Jack paying favors for his friend Jay Z. Yep. Yeah, Wendy. I know. It's like holy shit. Yeah, it was a deal over a party that Dorsey was tripping balls on. I heard that. Yeah. Yeah, I remember looking into Square right when that deal was going through, and I didn't understand it. I literally just put down all efforts to understand. Hmm. City, heading into the print, we are adjusting our estimates to reflect weaker U.S. box office performance, a higher tax rate, a lower Hotstar sub forecast, and the firm's recent write-off of its Galactic Star Cruiser. We maintain our buy rating and $125 target price. I Disney is so ugly, it's almost to a point of beauty. Because as I think B Hood made the comment earlier, it's a real collection of assets. We may not like the free cash flow it generates now versus what it used to, but do we think Disney is completely going away? No. Who's going to win in the short term? Bill Ackman or Warren B? I'd go Warren B, even though Warren B will tell you he's not a short term investor. You didn't say that today? Okay, someone else made the comment, the good comment about how, at its very least, as a collection of assets, like Disney's not going away. You have argued it's a conglomerate discount and should be broken up. Send you to Bob Iger's office. So JP Morgan said they no longer expect a recession. Within a matter of minutes, the S&P fell. The Dow Jones reversed lower in the afternoon trading on reports that a cyber attack hit hospital computer systems. The fuck? Warm here. Bob Iger's worst ever mistake was coming back to... That's some fucking savage shit. Someone said, my license out there IP, what does that mean? Like someone else can make a video of Mickey Mouse banging a street whore and make money. I don't think that's what they mean. Did the market puke because of a cyber attack, or did the market puke because JP Morgan called out a recession, or because, quite frankly, it was Friday, the market was doing well, and no one knows what the fuck's going on, right? I mean, given Nike and Starbucks trade at 30 times for being a brand name, why not Disney? To be fair, specifically on the Starbucks, and this is an interesting debate about essentially like valuation. Like people buying into Starbucks because it's say 25 forward PE is because inherently you may not believe it's 25 PE. You're saying, I think they're going to surprise to the upside on earnings. Right? Cyber attack on hospitals was way before the puke. That makes sense. So I do kind of get what Prometheum said. Then again, like with Windy, he's made this argument before, and it's hard to disagree with. Disney has some appropriate valuation. I don't know if it's where it's at, even with all the problems it's got, right? Oh, here we go.
S&P 500 options flows. That's from the SPX.
Right, here we go.
What you're looking at here is the S&P 500 in white and our hero indicator, which measures options flow in purple. Now, the purple in this case is measuring S&P 500 options flows. That's from the SPX index. The spiders and the ESE minis, we combine all those to give you a real S&P 500 composite indicator. And so as people buy puts and sell calls, this indicator will go down. This is negative delta trading. And as people buy calls and sell puts, the indicator will go up, which infers that there should be some buying pressure in the market. And as we open, we can see that the market move lower to 4,500 is met with initially deltas being sold or the hero signal going down, and then we get the move higher, right, which tells us that, hey, we're maybe in for a bounce. And what's interesting about this is even though we get a really big market rally throughout the day, all the way from 4,500 to 4,540, the options deltas basically drifted mainly sideways, as I categorize as maybe a little bit of a drift lower, nothing significant. But then you see here right around 2 o'clock, the equity market starts to sell off, and there's no response or initiation from the options flows, meaning this purple line doesn't really drift. And then something happens at 2:15, let's call it, where this big put buying program comes in, and that really helps to accelerate the downside and trigger a lot of selling in the S&P, and we've now broken this major 4,500 level. And I know this is put buying because if we break this out, you can see that the purple line is measuring only put flow, the orange line is calls, and so there is some call buying in the afternoon, as you can see, but this put buying, this blue line going down, tells us that that was really large and several $1 billion of put flow coming into the market. So that really helped to spur the downside. There's some evidence that this was zero DTE flow that aided in the initial selling, but this is really, the baton has been carried on by longer dated flows. And I could tell that when I look at this teal line, which is just measuring zero DTE flow, you can see that the magnitude of move between the teal line here at 215 and call it 230-ish roughly is about the same. But now into the afternoon, this purple line is accelerated lower. That tells us that it's really longer dated flows that are coming in. So this is, again, very large flow, several $1 billion worth of deltas, we'd call it, which imply that liquidity providers have to sell futures or sell stock, essentially, to keep up with that downside movement. So that's a major kind of risk-off type of move here, and something that doesn't give people the warm and fuzzies heading into the weekend.
Fair enough. Man's colorblind. Hey, don't dig the man. Don't dig him. You post a link to that? Sure. B Hood posted the link above, but here it is again. Yeah, Amazon makes sweeping overhauls of grocery. I caught that. Yeah, to compete with Walmart and Kroger. Walmart's a monster, and I think Walmart's made a lot of really good decisions in the last, like, say, 2 years. Amazon should avoid grocery. Agreed. Low margin, labor intensive, and I don't know if there's any advantage they can put. You just half ported Apple Weeklies. Good luck. We are cheering for you, brother. Hey, and Hooky, how you doing, my friend? What's the word of today? Amazon by far. Amazon was the big killer today, the big monster. Other than that, cybersecurity. How did they crush? AWS or Prime? Technically both. How about the China stimmy? Did they? China didn't announce shit, did they? I didn't think they announced something. I know there was an announcement overnight that they are removing the barley tariffs on Australia, but I didn't know if China was announcing any kind of stimmy. What's my price target for likes of Apple on and now? I have no clue. I have no positions in any of them. Well, I have a small calls position in Apple just to play a bounce, but B-Hood, they were supposed to announce overnight their stimulus program. I didn't know that. Dry Dog, you know I'm bullish on Amazon. Amazon was my largest options position between both my portfolios I play with, and I've already sold the vast majority of it this morning. So Amazon basically made up for a lot of my bad earnings plays because the size of my my Amazon position, for example, was like 4 times the size of like my Qualcomm position. So I'm happy today. Sick Chief, how you doing, my friend? Everyone, hydrate. Well, let me pull up. So it's 11:45.
I was there for Game 7 of the Sumo. Like, tends to not happen near the end of cycles, but near the early stages. So it's less about whether it was 11 or 12 or 13 or 14 or 10, and more about the fact that we're seeing these thrusts of relentless bids that tends to happen closer to the beginning than the end.
I know I'm preaching to the choir here, but can you explain to the audience or just affirm that an overwhelming amount of demand for stocks is not a bad thing, even though some people tend to think that that precedes a crash? Like,
yeah, I mean, there's a few things here. So we know mathematically, it's not like a guess. It's not like there's a random walk or like the efficient market hypothesis. Like all of that has been proven that none of that is right. Those were just theories. They were proven wrong. We know for a fact that asset prices trend.
Yes.
We know.
Yes.
There's common sense. Like you could just see it in the charts. They go up for a while, they go down for a while. But you could also do the math and you'll also see that yes, asset prices trend. It's volatility that mean reverts, right? The problem with most investors is that they are betting that asset prices are always mean reverting. And the technical analysis books do a great job of reiterating the mean reverting strategies and less the trend following strategies, which is one of the many reasons why investors are always looking for mean reversions when they should be betting on asset prices trending. And then on the volatility side, they do the opposite. They think high volatility is going to lead to higher volatility.
Why do we do that?
Oh, that's such a great point. We do that because of the gambler's fallacy.
Yeah, it's backwards.
We do that.
It's a lot of reasons.
We do that for the same. This is what built Las Vegas. People think the roulette wheel just was red 8 times. It's got to be black either this time or the net. It's not going to be 10 times without black. And of course, every time you spin the wheel, the probability is 50-50. What happened before is not. Okay, that was the key insight that Bugsy Siegel and Meyer Lansky had, like literally to set up these table games.
Yep.
And pick one. They're all based. Everything's based on this gambler's fallacy of what goes up must come down. What was red must be black. Even must be odd. So we know the stock market doesn't work that way. But that point about volatility is the thing that mean reverts. Meaning, you get a year like 2019. I don't know if you remember this.
I do.
People were complaining that there wasn't enough volatility for Wall Street to make money.
2017 also.
2017, maybe it was in 2017. That was like the worst complaint on Wall Street that year. Where's the volatility?
The meme was how many straight days without a 1% move, remember?
Yeah. All right, so all those dickheads got the volatility they wanted in 2018. Here you go. Plenty.
Yeah.
Two crashes inside of 1 year.
Well, I think the answer is that there's a time and a place for everything. There's a time to employ strategies that are good for low volatility environments, and there's times to employ strategies that are good for high volatility environments. We're not in a high volatility environment, so your high volatility strategies are going to suck. You want to sell puts, you're not going to get paid to sell puts, man.
One other thing on the relentless bid, you don't have to track how many days the Dow is up. Just eye test your own stocks. Does it feel like a bear market? Like, just look at your own portfolio at Robinhood or E-Trade or Goldman Sachs or wherever your stocks are, and you don't need the stats. You know.
Well, I don't think it's that simple. Different people own different things, Josh. So if you're in a diversified portfolio and S&Ps have done what they've done, you're doing well. But if you're like loaded up in meme stocks or you're loaded up in,
I think we could agree most investors own Apple. Most investors.
I guess. Are we going to do this again?
No, all right, enough. Here's what, JC, when I was on with you and Strauss, we were talking about how it's like, I'm using air quotes, only the big stocks going up. But what happens is that in bull markets, the rest of the market tends to catch up, and that's exactly what we saw over the last couple of weeks.
When we were last year, it was the big stocks that were not going up. They were the only ones.
No, so when I was on with you and Strauss, like a couple weeks ago.
Oh, recently. Yes.
By the way, plug that show. What's it called?
So we have the morning show. We do the morning show every day from 8:30 to 10 on Stock Market TV, and it's a lot of fun. We're doing this stuff anyway. We're at our desk watching the open, talking about what's moving, everything like that. So we just do it live. Why was record it? Yeah.
JC, how important is, so I know we're going to get to all your charts, and I don't want to be too short-termist here, but I'm looking at the RSP, which is the equator, the S&P. So RSP right now is engulfing the 4 previous days, meaning the high was higher than all of the previous 4 days, and depending on where the close is, which is 30 minutes away, so
that
we'll
is
say,
one big red candle.
The red is lower than the lowest level of the previous.
That looks like a stick of dynamite
of the previous 4 days.
Yeah.
So is this the type of thing that you're looking at? You're like, yeah, I'll wait. Listen, we're in a bull market. Clearly, I'm not going to let one outside day say that it's over. The top is in. I'm asking you.
I think the top could be in for some stocks. I would bet that it is for the year, actually.
Oh, really?
Yeah, for sure. I think a lot of stocks probably have peaked for the year, and a lot of stocks are nowhere near the peak. I think the back half of the year is going to be I think, very bifurcated, where you can have a series of outcomes. One of which is you get such strong rotation into things like energy, materials, industrials, things that have much lower representation in the major indexes, while the larger ones that actually have done so well in the first half of the year
Take a break.
might go sideways, maybe down a little, maybe a few of them go up.
Good, it's enough.
Well, whether it's good or not, it depends on what you own. But my point is, we could see a situation where there are huge winners at the individual stock and sector level, for that matter, and the indexes have a hard time going higher. Maybe they're a little higher, maybe they're a little lower, or you get that rotation and the relative strength comes from all those areas, but the big ones don't get hit and they kind of just grind higher slowly, dragging the indexes up too. I think the former is probably more of a sideways grind, maybe down a little bit, but the huge winners underneath the surface.
All right, so thank you for sharing that. I agree. By the way, you posted that specifically regard like trend chasing, so basically trend versus mean reversion, and I 100% agree with that. Mainly because you keep seeing, like, specifically like on the TA side, like people always sit there and say like, no, the TA like basically comes before the catalyst, or like, oh, it's because the market secretly knew something was going to happen. I've always been shitting on that. That makes sense though. What he specifically talks about, that makes sense. Well, the point that I liked, or the second point he made in regards to how the rest of the year, you could have a situation where if we see a rotation, we see differentiation, the quote stock pickers market, then you could see situations which people move into quote unloved stocks, but because of their representation in indexes, it could cause the indexes to theoretically go down. So people take dollars from Apple and put them into companies like Ingersoll Rand or PPD or Caterpillar, etc. I mentioned industrials as a category. Any ETFs I'm in? So I'm not in ETFs because I think there's just so much differentiation that's going to exist, specifically industrials. I would love to know what kind of ETFs, though, exist specifically for industrials. That's my question. Like, what does that look like? So, new all-time highs for Deere? Could be. Oh, market on close, $1.8 billion to the sell side. You know what that means. It means Monday is probably going to be good. Hey, Straight Perfection. How you doing, my friend? You actually don't know what market on close means. Can you explain it for a non-native speaker? I will do my best. So my understanding, and you guys keep me honest here, is that basically it's the advanced orders put for on close by the big institutional players. Hey, Laird, how you doing, my friend? Thank you for the sub. Mostly a lurker, but liked my take on Amazon yesterday and took a position before earnings. Least you can do is sub. Well, thank you very much. I appreciate it. Chad, you like to buy for Monday, but you're sure the U.S. debt will get downgraded 5 more times by Sunday. What happens if someone just happens to launch a missile at the head offices of Fitch, right? Yeah, industrials have done well, but there's still some areas of industrials that have not done well. By the way, this morning, a company by the name of LyondellBasell, I'm probably pronouncing it incorrectly, they reported and guide down. Yeah. So I think their EPS beat. I think their sales missed. I think they guided down slightly. This is a big chemicals producer. Their stock is not getting punished. Their stock is not getting destroyed here. It says, yeah, and then there are the things the market cares about that end up being nothing at all, like everybody's China doomerish takes. Remember when Neon was keeping TSMC down? It annoys me. Hey, this is Soul. Any thoughts on Victoria's Secretion? Sorry, Victoria's Secret and Becky stocks in general. I don't know. I don't know. I'm not betting against Becky. Ulta is one I want to keep my eye on. ELF did really well. ELF did really well. And I don't know if that's an ELF thing or if that's a specialty consumer thing. People are using Dow and LyondellBasell to play a soft landing economic recovery. The funny thing is even if, particularly, I'm being US centric, right? I'm being US centric here. To a certain degree, we have money loaded up, regardless of what the economy does. CHIPS Act and the bipartisan infrastructure bill already have money allocated. So there's already a certain amount of work projects that get done. Economy goes into a recession, that's fine. That money still exists. Kind of like the Micron situation. Yeah, fundamentals currently suck. You make the argument, always did. But people want to front run the upcycle. Correct. I think the only exception, specifically in the chemical sector, is there's a lot more players than there are in the memory sector. All right, let's go back to the SPY, see if the bulls have any hopes in the last 10 minutes. See if there's any heart being shown. The answer kind of looks like no. I mean, 447 was our pivot point, so there was a chance. It's just not strong. You like the idea of playing a goods China economic recovery with Dow, LyondellBasell, but you don't know enough about the sector yet to get long? Yeah, that would be the question I would have. Looks like someone could have gotten what, roughly 8 baggers on $370 puts. Yep. Are we covering the Palo Alto ER? When it happens, yes. Their earnings release is not for 2 weeks. But by the way, they announced their earnings release are on a post-market Friday. You don't see those often. Up. SPY's trying to show some level of heart. No, not enough. And look what the candle is going to look like on the daily right now. And I assume 440s in our future, right? Do we get pull points? Looks like someone will be. Not 4 o'clock. You have to wait. If I started a position in NVIDIA, nope, I'll wait. I want to see more bearishness on NVIDIA. Nvidia's going to crush earnings, guys. The question is it priced in? You'll make the argument everything's priced into that stock. It may not be. And it looks like the Bears are in control unless there's a big jump. Qualcomm, strong green in the close. You love to see it. Qualcomm should not have gotten beaten up as much as it did. Qualcomm was a complete overreaction. Time! Well played, well played, well played. It looks like the Bears win. Let me give you all your points. Bears win. There you guys go. Look at the SPY. Look at it. That daily candle's not particularly pretty. We are broken beneath the 20-day. Next up, 440. Anyway, guys, thank you very much for tuning in today. Reminder, Fridays are for gaming. We will be playing some trivia games tonight. Feel free to join the Discord, usually somewhere between 9 and 10 o'clock. Who's streaming? No, he's not back yet. All right. Anyway, guys, thank you very much for tuning in, and I will catch you all either over the weekend or next week. Yep, Eastern time. And take care, guys. Have fun.